Welcome again to Papaya Academy. My name is Sivan Fischel, VP Client Success at Papaya Global. In the early 1970s, sending money overseas was difficult. Back then, banks relied on telex machines, a slow, error-prone system with no standardized format to send payment instructions. To solve this, in 1973, the Society for Worldwide Interbank Financial Telecommunication, or as we know it today, SWIFT, was formed by 239 banks across 15 countries. And in this session, we will discuss it in depth. You will learn what is SWIFT, how correspondent banking works, about the credit and debit mechanics, foreign exchange rates, compliance, and how to optimize SWIFT payments. Let's go. SWIFT's original goal was to create a unified, secure messaging network for international payments, replacing telex. SWIFT went live in 1977, revolutionizing how banks communicated. Today, SWIFT is a member-owned cooperative that connects over 11,000 financial institutions worldwide. It handles millions of payment messages daily, quietly working behind the scenes whenever you transfer funds across borders. For most of history, payments meant exchanging something physical, coins, banknotes, or checks. But by the mid-20th century, physically moving cash became impractical. Banking shifted to wire transfers and electronic records to represent and transfer value. Fast forward to today, and we've seen an explosion of digital payment innovations, credit cards, ATMs, and online banking. Crucially, cash has rapidly given way to digital payments in developed as well as emerging markets. Let's now dive in to discuss how correspondent banking works. Cross-border payments often involve multiple banks working together. Here's a step-by-step look. Initiation. First, you, the sender, instruct your bank to transfer money abroad. You provide the recipient's banking details, their bank's SWIFT code, also called BIC, and the beneficiary's account number, usually in IBAN format. IBAN stands for International Bank Account Number. It's a standard global account number that identifies the correct amount across borders. Next, your bank prepares a SWIFT payment message with all the details and debits your account for the amount to be sent. If your bank has a direct relationship with the beneficiary bank, it can send the message directly to the recipient's bank over SWIFT. If your bank and the recipient's bank don't have a direct relationship, an intermediary bank is used. In that case, your bank's SWIFT message goes to the intermediary bank, which has arrangements with your bank and the recipient's bank to forward the payment. Large international banks often serve as intermediaries, holding accounts for many other banks to facilitate transfers. Finally, the beneficiary's bank receives the SWIFT instruction. That bank identifies the beneficiary account using the IBAN or account number provided and credits the account with the incoming funds. Throughout this chain, each bank in the path is identified by its unique SWIFT code, ensuring the message routes correctly. The correspondent banking system is essentially a series of banking relationships that act as bridges across countries. Behind every transfer, there's a sequence of debits and credits that keeps the books balanced. The way it works is that money is debited from your account and moved to an internal account at your bank. It then goes to a nostro account, a bank account your bank holds at another institution along the way. Each bank in the corresponding banking chain will typically add fees along the way, which are deducted from the payment. Finally, the money is credited to the beneficiary account. In essence, the money moves as ledger entries. Every debit on one side has a corresponding credit to the other. This double entry trail is crucial for accountability. It ensures that funds aren't lost and every bank's books remain balanced. Cross-border payments often involve a currency exchange. For example, if a company in Germany is paying a contractor in India, euros may need to be converted into Indian rupees. This is where FX comes in, and SWIFT plays a critical role in enabling this process. If a payment involves two different currencies, the sending bank typically either performs the currency conversion themselves, called pre-funding, or instructs a correspondent bank or intermediary bank to handle the FX conversion as part of the transfer. Let's break it down. If the sending bank already has an account in the recipient's currency, say Indian rupees, it can convert the euros to rupees itself and send the rupees straight to the recipient's bank. However, if it doesn't have rupees on hand, the sending bank asks another corresponding bank to handle the currency conversion. The bank would then send the rupees to the recipient's bank. Let's talk FX rates and spreads. The exchange rate used can vary. It might be a real-time spot rate, a pre-agreed corporate rate, or one set by an intermediary bank. Also, there's typically a spread, a small margin added on top of the interbank FX rate. This spread represents the bank's profit from the currency conversion. The sending or intermediary bank sets the rate, and often the sender doesn't know the final rate until after the transfer. SWIFT doesn't set rates, it only transmits instructions. FX fees and margins are often hidden in the final amount received. Now let's move on to SWIFT messaging basics and what's actually in a payment message. SWIFT is a secure messaging system for financial instructions. It includes sender and receiver bank details, amount, currency, and beneficiary info like name and account number. Each bank along the way checks the message for accuracy and compliance. It's important to remember that SWIFT doesn't move money. It just triggers the credits and debits between banks. SWIFT runs on a closed, secure banking network, making it extremely difficult for unauthorized parties to insert or alter messages. Every cross-border payment must follow strict AML and KYC rules. Banks are responsible for verifying identities and monitoring transactions to prevent illicit activity. They screen sender and recipient names against sanction lists and flag unusual patterns like unusually large or out-of-pattern transfers. If something looks suspicious, the payment may be paused for review. Every bank in the SWIFT chain shares responsibility for AML compliance, because the chain is only as strong as its weakest link. In many countries, regulators also require reporting of large or suspicious transactions to authorities. These checks are a crucial safeguard in global finance. In terms of pros, SWIFT is a fantastic system. Its greatest strength is its global reach and reliability. It connects banks in over 200 countries, making it possible to send money almost anywhere. It's highly standardized and secure. Banks trust SWIFT's infrastructure to deliver messages accurately and confidentially. On the flip side, traditional SWIFT transfers can be slow and costly. A standard SWIFT payment might take 1 to 3 working days or longer. Transparency is also an issue. You don't know where in the chain the payment is, or how much extra fees will be charged by the banks. It's important to mention that SWIFT is working hard to address these issues with new services, but the traditional model does have those limitations. This course provided a solid introduction to SWIFT and correspondent banking. I hope you enjoyed it.